Palantir stock has gotten a big boost recently from an analyst, one that is very well known in the tech space, from Wedbush, Dan Ives. He has now a new bull case price target of $50. Now, Palantir, the stock itself, did not need more analyst upgrades to actually have some solid momentum because it has been going quite well this year. Stock is up 66%, not because analysts are turning bullish on the company. No, because the company is proving that it is or will be a big AI winner. It is proving that the business is reaccelerating commercial and government. Now, I know getting some analyst upgrades is always very, very welcome, but I rather see the company execute than get plenty of positive analyst upgrades. Because remember, we've been talking about analyst upgrades and the suspicious timing of those price targets as well. For example, price target of Rivian of $130 just because Rivian was trading closer to that price, whereas now we've had the same analyst with a price target of around $30 to $50. What has changed? The business has gotten a little bit better. The only thing that has changed is the price of the stock. So the same thing here with Palantir. Just because analysts upgrade or downgrade does not mean that suddenly something has changed with the business. Most of the times, nothing has changed. But let's have a look at Dan Ives' history with Palantir and the so-called reason behind the new bull case price target. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. If you want to support me even further, do check out the link down in the description. Any type in comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Alright, so let me first start with the average analyst price target. There are 18 analysts covering this stock. Unfortunately, we'll probably only get 2, maybe 3 analysts on the earnings call. But the average analyst price target has gone up this last 12 months. It now sits at $22.06, representing 22.8% downside from the price we're at today. If we look at Palantir's business over the last couple of years, over the last 4 or 5 years or so, revenue has increased 214%, gross profit has increased 241%, SBC as a percentage of revenue keeps coming down, and now the EPS estimate 5-year growth rate sits at 22.41%. Of course, the company is free cash flow positive and is now generating some income. And if we're looking at the sales growth of Palantir over the last couple of years, calendar years, previously it was growing quite fast, over 40%, then a deceleration, 23.6% year-over-year growth. Then we had that year where growth was quite slow, 16.75%, but this year we are seeing a reacceleration, 21.27%, but still far, far away from the so-called 30% goal. Now the same goes for all the rest here, gross profit, EBITDA, EBIT, and net income. We were growing much faster before, although right now from a profitability standpoint, we are a more profitable company, and I do expect that to continue for a long, long time. But purely looking at revenue growth, yes, we're still far away from how fast the company was growing previously. Of course, it is a bit bigger right now, but still, revenue-wise, not generating that much, right? $2.69, $2.7 billion for a $50 billion company is really not that much. So the minimum that we are expecting is, of course, more than 20% year-over-year growth. What is the company expecting? Well, for Q2, which we're going to get the numbers pretty soon, revenue to come between $649 and $653 million, representing around 22.3% year-over-year growth, so a bit better than last quarter. For the full year is actually a little bit lower than what the analysts are expecting, but okay, let's go with that number here, 21.27% year-over-year growth. EPS to grow, this is adjusted, so non-GAAP, is expected to be 33 cents, growing 32% year-over-year. But overall, you're seeing here that the analyst expectations on average for sales growth is still pretty low, 20.28% year-over-year growth in fiscal year 2025, and then just 18% growth in fiscal year 2026, with EPS growing, let's say, as fast, which I think is quite conservative. Now switching to Dan Ives and his commentary on Palantir and the history of his price targets. So a while back, he talked about Palantir after their earnings report, which was a pretty good one. So last night for Palantir was when this company went from an off-Broadway play to a primetime Broadway theater right off Times Square under the bright light. I really don't know why he has to write as if this is some kind of Shakespeare play, but okay. US commercial business up an eye-popping 70% as AIP the foundation for AI use cases. Now we know that it grew 70% year over year because, well, if you compare it to the same quarter in the year prior, that was a negative growth quarter. So in reality, it was closer towards the 40%, which still is quite good. So back then, price target $30 as a re-rating here. Continuing here, Palantir delivered, this was last quarter, Palantir delivered another robust performance led by US commercial growth of 40%. Bootcamps are exploding, deal conversion is accelerating on the AIP vision. The key to the stock is AIP US commercial, and the Messi of AI is executing on the golden AI vision, $35 price target. He continued raising our price target on Palantir from $30 to $35. Our recent checks on Palantir, by the way, these two tweets here are only a couple of hours apart. Our recent checks on Palantir in the field have been incrementally more bullish, as we believe the AIP Foundation is becoming viewed by many US enterprises as the launching pad of AI use cases, Messi of AI thesis, emoji of fire, bull, and popcorn. Now, the reason behind the first $25 price target and when he came out with the Messi of AI, by the way, C3 AI was the LeBron James, I think. So yeah, do with that what you want. Anyways, I'm going to read here a couple of things. We are initiating coverage on Palantir with an outperform rating and a $25 price target. In a nutshell, we believe Palantir has built an AI fortress that is unmatched and poised to be a major player in this AI revolution over the next decade. Given the company's extensive experience handling customer data, Palantir's transition to a pure-play AI name will leverage its existing expertise to drive advancement and deliver AI solutions powered by high-quality data. By capitalizing on its data-driven foundation, the company can harness the power of emerging LLMs to enhance platform capabilities. We believe Palantir will capitalize on the expansion of new use cases over the next 6 to 12 months, given its large partner ecosystem and extensive product capabilities, by servicing the rapidly increasing demand for enterprise-scale generative AI intelligence. This is early innings on a sum of parts AI story, just on the cusp on monetizing this massive greenfield AI opportunity. By the way, I'm already going to talk a little bit about the conclusion part of this video. Many companies are spending a lot of money on AI and not seeing the return on investment. When that will happen, when more and more companies will realize, look, we've been buying software, we've been buying products, we've been investing millions, if not billions, on something that we're not seeing any results right now. How come this company or how come our competitors are investing millions in Palantir and they are getting the results? Maybe we should check that out as well. I believe that we're going to see this more and more. I'll end here. Wedbush Scenario Deep Dive Model, our in-depth Wedbush revenue build proprietary scenario analysis model, bull, base, bear, on Palantir gives us a high level of confidence in this core next generation tech name to play the AI wave with an attractive risk reward at current levels. Our $25 price target represents approximately 10x our fiscal year 2027 revenue estimate of $5 billion at our bull case scenario. After modeling a bull case and bear case scenario analysis, see model page 12, I don't have it, we believe the stock can continue to re-rate and trade well above its software peer group over time as Palantir continues to expand and capitalize on this AI revolutionary period. Now, fiscal year 2027, revenue estimate of $5 billion, we're now sitting at under $3 billion. And as you've seen right here, the analyst estimate for fiscal year 2026 still sits under $4 billion. So yeah, he is quite bullish. Where he was very bullish before, now he's even more bullish because his price target went up. which you can see here in this post, with AI spending taking up more spending in IT budgets as more organizations learn how to properly implement this tech, we believe the Messi of AI Palantir is in a prime spot to continue expanding its pipeline as AIP is front and center. New bull case target Palantir $50 emoji of a cup, bull popcorn and fire. Now this is very important because when he went on, I believe, Yahoo Finance, he still has the original price target is still $35 with an outperform rating. This is the base case. The bull case is $50. So it's not that he went from 35 to 50 and that's the base case. No, that's the bull case. And the reason behind that was basically this from what he explained on TV. One, he has spoken with 100 customers and the conviction level are increasing. Deals are accelerating, conversion is stronger than expected. All of this, by the way, is to play out in the next 6 to 12 months, so not in the next quarter. Carp and Palantir have a big moat that most of the analyst institutions still do not understand. And when you do, you look at valuation. Yes, it is expensive, but when you look at the sum of the parts, commercial, AIP drive, and you put a multiple on the government business, that's how they arrive at their bull case price target of $50. Now, I do want to switch a little bit to a valuation model where I reverse DCF to reach the $50 by Emir. I link his X and YouTube channel down in the pinned comment. You should definitely check him out. He did make a full video on the valuation, how he values Palantir right now. I highly suggest you go watch that. So he says here, Dan Ives $50 bull case price target implies 35.17% revenue CAGR, 30% free cash flow margin, all on a 10-year period, using a 3% terminal growth rate and a 10.21% discount rate composed of 3.97 ERP, taking that number from Aswad Damodaran, 4.24% risk-free rate, and 2% execution rate. That's how you reach $50 per share. Now I'm asking you this question. He asked you the question also on X, but I'm asking you this question. Do you see this as a realistic scenario? Do you see the revenue growth happening, 35.17%, adjusted free cash flow margin of 30%, which I think is quite realistic going forward, but the revenue CAGR here, 35.17%, to me is too much, in my opinion. Maybe in the future we're going to get years where 35% is happening, but right now I do still think that, yeah, I mean, if today, this is an easy question to answer, right? If today, or well, whenever you're watching this video, Palantir is at $50, knowing what you know today, knowing what the company is reporting right now, $50, do you keep your shares or do you sell? Let me know down in the comment section below. Me personally, although I'm very bullish on Palantir, if today you're telling me that someone wants to buy my shares for $50, he can have them. And by the way, this is not about pricing. So you're not going to see here, oh, $50 per share. That means 10x, 15x sales for fiscal year 28 or fiscal year 2027. No, this is a reverse DCF to reach that number. And these are the assumptions made. Now, of course, with Dan Ives, maybe the reason behind the $50 is, yes, because you put a multiple, I don't know, X multiple on the government business, X multiple on commercial, and this is how you're getting $50 because in fiscal year 27 or 28, this is the multiple you put on that. Okay, could very well be. I think it's just a momentum thing. I think, in my opinion, no disrespect to him, but it's another reason to get on TV. I don't see any reason right now to put a $50 bull case price target when we are a couple of weeks away from the Palantir earnings report, when your base case $35 price target still hasn't changed and the reasoning behind it hasn't changed that much either. So yeah, I'm not here to disappoint the viewer because I'm still very, very positive, very bullish on Palantir. But yes, I do find it quite strange and I do find this number quite pricey, especially for the next 6 to 12 months. What do you think? Now looking at the graph, looking at the stock, and no, I'm not wearing the new Brazil jersey just because this is called the Messi of AI. This is pure coincidence. Or is it? Anyways, looking at where we are right now, this is the same point we were back in September 2021. We got a big rejection there, and then of course the downtrend has started. Now, of course, today Palantir is a much different company, a better company, a more profitable company than before. So the momentum is definitely with the stock right now. Now, as we know, earnings season, things can get quite wild, and especially now with the announcement that Joe Biden is not the nominee anymore, well, the market in the short run can be now even more volatile because the market does not like uncertainties. So let's wait and see what happens. Palantir will keep doing what it has to do, which is convince clients that it is the best product out there, increase sales, reaccelerate. We're going to see a reacceleration in government. Anyways, that's what management has already alluded in the last 2 quarters, I believe. So exciting times ahead. I just hope that the stock does not go up too fast, because then you're going to see a lot of people get burned, because eventually, yes, eventually valuation matters. So that's about it for this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.